Can we just talk about real estate quickly? Because I know there's cost segregation, there's a lot of different stuff like that. So I know that that's something that people might probably want to be interested in.
Absolutely. So what I'm going to do here is, I'm not sure if you guys caught my presentation. I know you guys were going crazy during InvestFest, but I did a presentation during InvestFest, and I want to talk about real estate and cost segregation and what it means. And a lot of times people are like, listen, I need to make a change. I need to do something. I need to invest in real estate. But what happens is they may get between depreciation expenses. And so between depreciation expenses and between the deductions of operating the real estate, they may just come off a bit like being tax-free, right? So you may just like be tax-free. You can get that real estate income, but a lot of times people have business income, right? You have business income that you're like, listen, I need to offset this business income and I need an asset that's going to help me do that. So what exactly do I need to do? Right. So that's great. I was able to, utilize, and I say all the time, real estate is one of those amazing tax deductions where you can win in real life and lose on paper. And all that means is that in real life, you're bringing in money. But on paper, because of depreciation, which we talked about when we were talking about vehicles, you're able to now lose on paper, right? You're now most likely reporting a loss because you're able to take all those deductions. So basically, what we do to take it a step further, right? So all of my people that is like, listen, I need a higher depreciation expense. So therefore, I'm now able to, go and deduct all of my, deduct my real estate losses and have it offset my business income, right? So how can we do that? So we do what's called cost segregation. Cost segregation is pretty much just a study, right? It's a process that looks at each element of your property. It is not something that you can go off and do by yourself. It is an actual analysis that has to be done of your property. And then when it comes to the cost segregation, what happens is you can also, so we talked earlier about bonus depreciation, right? So bonus depreciation pretty much up until 2022, it was 100%. But then up until, now it's only 60%. But what happens is the IRS says, okay, every single asset has its specific asset class, right? Like it says, hey, this is a building can be written off over 27 and a half years. Personal property can be written off over 5 years. Land improvements can be written off over 15 years. But how do we utilize bonus depreciation to like magnify or give us more of a depreciation expense? What we can do is, so in this example, we have a house that's $500,000. Keep in mind, guys, you cannot take bonus depreciation on a building and you cannot depreciate land. Okay, so in this example, you see that the home is $500,000. The building is $250,000. You're going to still divide that over 27 and a half years. You cannot take bonus depreciation on it. So the depreciation expense there is going to be $9,382. Then you have personal property, $87,000. The depreciation, you can take 60% on that. So that's going to be $52,200 depreciation expense that you'll be able to take off of the personal property of your home. Right. And people are like, oh my God, like all of this, like, how can you break it up like this? But you break it up because your house is not just a building, right? Your house is made up of different things. So let's dissect the property and really maximize on this depreciation expense. Then you have land improvements. So this is like your driveway. So that is $25,000. Depreciation expense, you can take 60% of it, is $15,000. That's going to give you a total depreciation expense of $76,582. Right? So now let's just say you did not do cost segregation and you just said, okay, well, I have my home of $5,000 and then I had land of $130,000. I need to back that out. You would have about a $13,500 expense, depreciation expense. But when you do cost segregation, now you're able to have a depreciation expense of $76,000, right? And so now what that does is, let's say for my people that are, let's just say you're in real estate and this is what you're doing you're doing real estate full time, and let's just say you're investing in another business that's more passive, right? You don't really have to be that active in that business, but you have this money that's coming in. You need something to offset that money. And so why not utilize cost segregation? Why not dig deeper and really understand, like, okay, how can I really utilize the tax code and these things to my advantage? And so many people are entitled to these things, but they're not aware that they're available. So I love cost segregation. I love real estate. It just helps. I love depreciation. Anything depreciation is involved in, I love. It like just starts wiping stuff out. So I love it.